Now you've probably heard that the main knock of Fibonacci levels is that you place a bunch of Fibonacci retracements and extensions on your chart, and some are bound to be hit. Well, the fact is that Fibs are just a tool, and like any tool in any type of system, the usefulness depends on the user and the rules that they follow in the application. Now I want to show you several ways that may be helpful for you to get a handle on Fibonacci trading. So what are we going to cover? I started trading in the Fibonacci world, and to this day I utilize certain aspects of it, as you may have seen from the various articles and videos that I made over the years. Now Fibs are a wonderful addition to a trader's toolbox, from trade locations to profit targets, and I've shown how effective they can be over and over again in live trading. Now I'm only going to cover the techniques that have worked for me, including those that I've learned from over the years, and I'm going to do my best to avoid pontificating about the best way to use them. To give a definitive best way, right way, only way comment would mean that I've done enough testing in all instruments and market environments to be able to objectively discount any other usage. And I have not undertaken that task. So take it all as food for thought. Just pick out what may be useful for your strategy and then just discard the rest. There's also a ton of information on the internet about sunflowers and pyramids, Fibonacci numbers, and how to calculate them. So I am not going to cover that information here in this piece. So let's jump right into how these lines can aid in your trading, and then we're going to wrap it all together in a framework of a possible trading plan for you. So retracement levels. These are the levels that you would use to find support or resistance in your given instrument. The issue has always been where to start and end the measurements. So taking a step back, ask yourself, what are these levels representing? Well, for me, they are a measure of human behavior, and they're a framework to understand emotional extremes. Now, given how I look at the representation, I look to the overall move, the obvious swings, which can be subjective, and also to pockets of consolidation. Now, my mentor, when I was learning the basics of Fibonacci, he would also use thrust bars and gaps, which they certainly do show where the extreme action resides. Now, the levels that I use are the 38.2, the 50, the 61.8, and 78.6, and I really like to see the last two numbers in a potential zone of opportunity. Now, this is a 4-hour chart of the Aussie US dollar forex pair, and it is coming off of a downtrend in price, and we're going to look for zones of support. Number one, this extreme is anchoring at the areas marked with the light blue areas. There is a stacking of two Fibonacci ratios, the 61.8 and 78.6, which we will call confluence. I don't trade off of a singular level, and a confluence is always a welcome sight. Now the pull areas are clear. The start extreme of the low and an area consolidation, which saw rapid price movement. Price rebounds to the pip and advances. Now number two, anchored with the red squares, and why these swings were chosen should be pretty clear. There is another confluence, although 50% is not a Fibonacci ratio, but is used as an eyeball pullback level of ratios and price advances. Number three, represented by the black squares, this level is a confluence of levels, and once again, price advances. Now, the last chart ends on the last thrust, and our next chart will show the down move after the last chart ended. Number one, price rallies from the low and stops at the 78.6 level. There's no confluence of levels on this time frame. However, there is a resistance level not drawn on this chart, as well as a backward bounce off of a trend line. Now, for me, that's also considered confluence because I'm not a Fibonacci purist. Number two, the red line shows the rally that terminates at a confluence of fibs. Number three, price rallies to the 78.6 level and terminates to the pip and crashes to the downside. Now, heading back to number three, you will notice a horizontal line running across the chart. This is the 78.6 retracement of the previous uptrend from our last chart, pulled from extreme to extreme. Now remember, as I said in the beginning, the biggest knock of fib levels is that a bunch of lines will get hit or exceeded. Now while that's true, it's also a very simplistic way of looking at the usage of Fibonacci levels. These two charts have demonstrated using obvious multiple levels as well as looking at a confluence of factors before considering a trading opportunity. Now there's so much more to Fibonacci than retracements I think you should find interesting. Using extensions. Now, an extension is a measurement greater than 100% of the previous move and are also used to determine potential areas of resistance and support. Now, there are three numbers, and they are 127.2, 161.8, and at times 261.8. Now there are a few ways that extensions can be useful, and that is to look for previous swings to terminate at the 127% level. This can be used for profit taking and for finding a confluence at a potential area of support and resistance. And I've spoken about the 127% extension in the past, and it is tagged quite often once we do see a break of the 78.6 retracement level. This chart here should look familiar, as I'm going to use the same sections throughout this piece so that I'm not tempted to find the best case scenarios to fit my narrative. The up arrows will show where the retracement was pulled from, and the down arrows will show where the extensions end. Number 1, this area is the last swing into the low before the uptrend began. Note the highlighted inset box, as it shows that this level at number 1 is also a 78.6 retracement level of the prior swing up in price, which gives us a retracement and an extension confluence. Number 2, a swing inside of a bigger swing is valid, and this extension terminates at the 127 level. Number 3, much like number 2, it's a swing inside of a swing. Number 4, this may not be as obvious, but remember that most times price details are hidden with higher time frames. This area was inferred due to the smaller retracement in the run-up. Dialing down to the 1-hour chart confirms that it was an actual swing in price formed from a momentum bear bar countered with a momentum bull bar. Look back at our first chart and you will see that we have a confluence of extensions and retracements at all of these turning points. Now, what are profit extensions? We covered that extensions can determine potential support and resistance, so we can use these as objective profit targets by changing how we draw them. Now, the arrows on the chart show that we draw retracements from high to low into the swing and then extend our ratios to the upside. Now, this is an uptrend context. Just reverse that for the downtrend. The red lines show where we had a confluence of fib ratios, price supporting, and you would look for a trigger into a trade. Now you have objective targets for your trade, and you could opt to exit at the 127 or use it as a scale out position and look for 161.8, 200, or 261.8. All that would depend on your trade plan, and if you have other means to determine that the momentum in your trade direction may be experiencing a pause or a pullback in price. Now, price projections and symmetry. Projections use 3 areas on the chart, and you're going to need to use that tool that allows you to measure A to B and then project from C. Now, charting packages have different names for them, so just make sure that you have a tool you can draw 3 points. Now, it's just a simple measure. What happens when you're using this tool is you are measuring a previous swing in one direction and projecting it in the same direction at another place on the chart. Now, before moving forward, I think you've seen how price can have a rhythm to it. Now, you've probably seen it occur in trend channels where price moves back and forth in a descending and ascending fashion, and it makes contact with the channel extremes. Price will move in this fashion before spiking in one direction or another. It will then start that process over again. So price is like that Russian nesting doll. Inside of each major leg of a move, there are smaller counter legs that are oftentimes extremely close in price and time. Now, you can measure the distance of one swing and project that swing to another swing, and then look for the 100% level, which shows symmetrical pullbacks in price. Once you see a counter move in price that exceeds with conviction 100% of the previous move, you can be on alert for potential change of state in the market. Now, transitions can be pretty dirty. Now, I'm using the same area of a previous chart that showed the downtrend to once again keep things consistent. It actually makes things more difficult, as the evolution from an uptrend to a downtrend is rarely neat and tidy. And I'm also going to include price up to the date of this article and video. This chart shows an overview, and the circles indicate the hits of price and the 100% symmetry level. The left side of the chart's a little sloppy, as this is the area of the turn of trend. You can use the last swing into the high, in the case of this uptrend, and use that for projections as well. The blue lines are the swings that are being projected. There's 2 areas of interest. Number 1, this pullback, although large, is virtually 100% of the last major pullback into the high before we turn lower. At this point, we can use this rally in price as the line in the sand, and if price rallies in the future greater than this, we may want to shift gears to look for buying opportunities. Number 2, you can see that price has rallied almost to the same degree as number 1, but at this point, shorting opportunities can still be considered because this is a normal rally in this leg of the move. Now, another use for the projection tool is called expansions. I'm not going to cover them because I don't really use them in a Fibonacci sense, although I do use it for a measured move target once a range has been broken. Now, let's get into our strategy. Simply drawing fib lines and looking for hits, it's not something I've ever done. And it's really the sign of someone who only has a rudimentary knowledge of Fibonacci trading. I've used and continue to use combinations of all that we've discussed so far. But time really does refine your trading in many ways. So I'm going to give you a bare bones trading strategy that you can certainly build upon, and just don't be surprised if you start seeing price in a whole different way. This can really lead to those aha moments of realizations and understanding that you can only really find that when you do the actual work. Now, there were so many opportunities on this chart, so I choose to use one where the detail was much clearer due to the size of the rally. Now, this was off the high that we saw a few charts earlier. Number one, this is the final move leading into the high and where the symmetry projection was anchored from and then projected from the bottom leading into the rally. The 100% projection, the red line, has been plotted. Number two, a high to low retracement is pulled and the blue horizontal line represents the 78.6% retracement. Number three, a swing into a low is made. And we again pull our Fibonacci retracements from high to low and then project to the upside, noted with the pink horizontal line, which is our 127 extension. Number four, Fibonacci retracement from low to the high of the rally and a profit projection is made at 127. Number five, this represents extended targets of 161 and not shown. However, price does bottom out about 40 pips below the 200% mark. Now you can see that everything that we've covered has been applied to this example. So it all follows a sequence, starting with symmetry projections. We roll through each tool and we see if there's a confluence of levels lining up so that we can zero in on a zone of opportunity. Now, I will rarely take a trade that does not have a 100% symmetry projection in close proximity to the setup. I want to see a pullback in price in the same ballpark as previous ones. If the pullback exceeds the symmetry of prior ones, I am extremely cautious, and I'm going to look for structures to be in place as well as momentum turning in my direction. Now, no triggers have been mentioned in this piece. However, you want to find a way into these moves other than just pushing buttons. I've covered how to enter a trade setup in previous videos and articles that you can explore. That said, I have many times set and forget at levels where we have a fib confluence as well as structure involved at a level. Now, the higher time frames, we are generally always trading inside of bigger picture price structure, and what is covered here also applies to higher time frame charts. Think back to the chart that showed our uptrend turning into a downtrend. Near the turn, there was a trade set up to go long, and just looking at that chart, there doesn't seem to be a pressing issue. This daily chart shows a yellow highlighted area, and that is where the trade setup took place. We were running into quite a few issues, and although the trade hit both the 127 and the 161 areas, it could have turned out for the worse. The blue arrow is a high to low retracement that gives us a 38.2% zone at the blue line. The red line and arrow is our symmetry measurement that is projected from the X. Finally, our green arrows and lines are our extension levels from two swings. We also had an area marked Z, where price resisted in the past, and although you'd never know if price will resist in the future, we have a huge confluence in that zone, and that should be just a red flag for you. Now, we've covered a lot of ground here, and I have to say that the examples, they're not cherry-picked. I simply took a Forex pair, I scrolled to the recent past, and bar by bar, I plotted out the fibs. Areas where there was not a confluence, that single fib line was just removed. Now, like any aspect of trading, though, these are not foolproof. Price will bust through even the heaviest of confluence at times, so you may want to read the price action around the zones, a price pattern, or view some other type of trade trigger to get you into the trade.